Good evening, everyone. My name is Raghu. I'm the head of research at Kuwait Financial Center. I'm also the managing director for Marmor MENA Intelligence, a fully owned research subsidiary of Markaz. Uh, I'm very happy to see all of you for this webinar. Though the circumstance of this webinar is not that propitious, we are all still suffering from coronavirus. And this webinar is basically to give you heads up on how far we are into the problem and what is the impact of corona uh, on Kuwait business very specifically. So I'll be taking roughly about 45 minutes to go through my presentation, and then you can type in your questions, and I'll be very happy to take some of them time permitting. So let me load on to my presentation. Yes, my agenda for today evening would be threefold. The first part would be to give you a glimpse of where do we stand from a health perspective, both the GCC-wide comparison as well as Kuwait. And then I will jump on to the economic aspect of COVID and the business aspect of how it has affected various businesses. And the last part of my presentation would focus on the recovery. What could be the scenarios, how good and how fast the recoveries are expected to be, and what type of government support are we seeing so far, and what is the likely in terms of government stimulus package. So this is broadly the structure of the presentation. Let me first present you with uh, the crisis. In terms of the global scene, we have already crossed about 7 million, though it says 6.5 here, because that's the speed with which things are happening globally. We are already seen a death rate of about 400,000 people, though we are also seeing some significant recoveries. And globally, the number of tests performed has been increasing. But if you look at the chart, it shows very telling statistics of the country that has been the most affected, which is the America, USA, where we have close to about 2 million cases, and they count the highest in terms of cases per million as well. And they also count the highest in terms of the number of deaths out of COVID at more than 100,000. And right at the bottom of the chart is China, from where this virus originated. Significantly enough, Chinese damage from the coronavirus has been the least, measured both at the total number of cases as well as measured as per million. Now, this is very strange and surprising, given the large size of China as a country. However, a lot of European countries have been significantly affected, as we can see in this chart. And but Asia generally escaped the wrath of Corona as compared to North America and Europe. Now, coming to GCC, the scene is, pretty bad if you look at the curve. None of the GCC countries' curve are showing or exhibiting any syndrome of flattening. We have about 250,000 cases across GCC, and with the Qatar counting to be the highest, both in terms of number of cases as well as per million. And the good news about the GCC is that it has a very strong recovery rate. So even though the number of cases are increasing, the people who are recovering from corona is also quite healthy. And the GCC has also been very aggressive from a testing point of view, which probably could be the reason why the curve is not flattening. However, unless we see the curve flattening, it's not going to be a good news for GCC. Uh, a very important measure for corona is the number of days it takes to double. So what is technically called as the doubling time, and also the fatality rate. The fatality rate is the number of people who are dying out of corona. So we see that it's a matrix of 4 quadrants, and the top left is the best quadrant to be in, where you have a slow doubling time and low fatality rate. So far, only 2 countries are in that box. Fortunately, there are no countries in the box which is the deadliest box with high fatality rate and fast doubling time. But many countries are on the right hand side of the box on the top, and they now should now move towards the left. Uh, the As I said, the number of cases that are recovering from the corona has been quite healthy in countries like Saudi Arabia, but not so much in countries like Oman or Kuwait. Especially if we look at Kuwait, we so far had about 30,000 cases, out of which we have only 230 deaths, which is a good news. Nearly half of confirmed cases have recovered, and we can see some aggressive testing for Kuwait. However, it's too early to say whether it is flattening. As we speak, we are getting about 700 to 800 cases per day in Kuwait, and we have to watch that this number comes down for us to make an assessment that probably we are at the beginning of the end. But as of now, we are certainly not there in terms of the statistics. Now, this is the health dimension of corona at a global level, at a GCC level, and at a Kuwait level. What is really the most severe aspect of corona is the lack of mobility. Corona as a health scare has disrupted both the demand side as well as the supply side. And on the supply side, we have seen the mobility as an aspect coming to a standstill. However, mobility is very central to human activity. We always move from one place to another for something or other. So if the mobility aspect is brought to a standstill, that will affect the movement of goods and services, and it will affect the access to practically everything. Because whether it is food or education or emergency medical aid, for example, the central theme of human living is mobility, and that is now on a standstill. So we need to understand this context, and it is also possible to understand the same concept of mobility through a Google real-time chart that tracks the movement of people across various sectors. And you can see that the only positive line here is residential, because people have all moved to their home and they're staying put in their home, and therefore you can see a lot of movement in the residential. But if you take the other aspects of mobility like retail or grocery or workplace or transit stations, every aspect of life, as you can see in this chart, has experienced a lack of mobility to the extent of a drop ranging from 80% to nearly 90%. So that is the extent of lack of mobility today that we face in the society. So when eventually this virus ebbs and goes away, we have to make sure that this chart reverses course and almost all line comes on top. So this is a very important aspect to look at. Obviously, when we had the first instance of COVID by the end of December, we took very lightly of it. We thought it's a very Wuhan thing, and at best can affect China, nothing more, maybe a couple of Asian countries. And so people were practically ignoring Corona till about middle of the Feb, which is to be very precise, 14th of February. That's when the real scare took place, and then it affected markets. And then you see that the global markets fell across the board, from US to the world, to emerging markets, to France, UK. And you can see here that the fall has been pretty significant between Feb and March. So those 2 months can count to be the disastrous month from a market point of view. And GCC is not immune to this, because GCC in fact faced a double whammy, a corona and an oil price crash. So in fact, some of the markets in GCC tanked significantly. But the 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 swiftness with which US started rolling out stimulus program ensured that the markets revived much rapidly than what we anticipated. So almost you can see that, let's take for example S&P 500. S&P 500 has recovered nearly 19% from its loss, and year to date it's only minus 3% today. So a minus 3% market impact can hardly be considered as a significant crisis event like a global financial crisis. So this is mainly not because everything is coming back to normal, it's because of the huge flush of stimulus program being unleashed by the central banks around the world. And that is, making sure that there is adequate liquidity that flows into asset markets, and it's just keeping those asset markets buoyant as we speak now. However, we notice a very different trend in GCC. GCC markets haven't shown as much recovery as global markets. We can come to the point of why GCC markets are taking their time to recover. From a sectoral perspective, obviously energy faced the wrath of the market because of the huge fall in the energy price to the extent of about 70%, and followed by financials and industrial. And there are some sectors like healthcare and technology that benefited out of this crisis as well. In the case of GCC, of course, the worst performing sector happens to be real estate, followed by cyclicals and financials. And the non-cyclicals and telecom have done relatively better compared to other sectors. As I said, the point to note here is that the GCC markets are yet to see a significant recovery, unlike global markets, which have experienced fantastic recovery. In terms of global markets, the least affected is China. That is because Chinese market has been in a bear grip even before the commencement of Corona. So moving on, we have just seen the health perspective of Corona, and we have seen the market impact of Corona. Now we'll take a dive into Kuwait economy and businesses, which is of importance to us living and working in Kuwait. Obviously, the biggest impact is at an economy level, where the real GDP is expected to contract by about 5%. Most of the impact would be on the oil GDP, but non-oil GDP contraction will also be very significant. Kuwait has a break-even oil price of about $67, and any oil price below $67 will technically result in a deficit, which needs to be financed either through reserves or through borrowings. International borrowings will be difficult for Kuwait because the parliament is yet to pass a debt law. So till that time, the reserve depletion will happen. The biggest impact of corona would be on the fiscal deficit for Kuwait, which will turn from a surplus of 4.8% of GDP to a negative 10% of GDP, which is considered to be very significant. Kuwait expenditure is very inelastic because most of the expenditure is in the form of current expenditure, which means it is towards wages and salaries and subsidies. So there is little headroom to really optimize on that. Of course, there are ways and means to augment non-oil revenue, but Kuwait has not taken adequate measures like other countries like Saudi Arabia or UAE, like VAT introduction, for example. So those options are also pretty much out of reach as of now. So we expect that the government will try to use the reserves to manage the fiscal deficit, and of course, from a reserves point of view, Kuwait's foreign assets stands at about $580 billion, which provides a 5 times cover of GDP. Probably this can count as one of the the best coverage among GCC countries. So in that sense, we don't have to worry too much. In terms of the economic impact, we are still seeing a lot of estimates coming out from many specialist agencies. The economic call ranges from a minus 1.1 on the lower side to nearly minus 6% on the higher side. But what is worrying is on the fiscal deficit. I see a big range of calls here from minus 10% to minus 40%. The truth can be somewhere in between. This is primarily because of the huge plunge in the oil price. The oil price recovered quite a bit from their lows, but it is still far away from the break-even oil price or the average oil price that it has been experiencing last year. Obviously, Kuwait is going to be impacted by severe job losses. Our research shows that across the sectors, we will encounter significant job losses, and it will be really a lot of effort to bring these jobs back on the table in the near future. If you look at the sectoral composition of Kuwait, we can see that most of the sectors are highly vulnerable to corona, and some of them are reasonably vulnerable, and only about 16% are low vulnerability. But obviously, there are some big sectors like financial services and education that will be significantly impacted. Now, what will happen is that when you are on a lockdown mode and when there is no mobility, people will be pushed to work from home. But there are some sectors that lends itself nicely to working from home. And you can see that in the chart here, like software or IT-enabled services. But there are some sectors like, say, hospitality, where their ability to work from home is almost nil, or construction, for example, or retail. So, it's not that the response to corona will be in the form of work from home across sectors. Sectors that can cope with this will cope, but there are many sectors that will not cope. Now, the immediate the fallout of corona is a drop in the monthly household expenditure for families. The usual spend is about 1,327 dinars, and our research shows that it might fall to about 800 during the lockdown period. And there are some categories of expenditure like food and housing that will be inelastic and will not show any decrease. Rather, food will actually show an increase. But there are some components of household expenditure, like, for example, furnishing or clothing or transport, recreation, that will see a significant impact in terms of monthly household expenditure. This statistics is very important to see the impact on retail, for example, or financial services from an impact point of view. So key sectors that will be affected by Corona will be banking. We will see more in detail shortly. Banks will obviously be hit on several fronts, and I'm going to walk you through the numbers quickly after a couple of slides. Obviously, retail will be the most impacted because almost all retail outlets are closed and pushing residents to panic buying. And a big burden on the supply chain is created, actually. And real estate is also a big casualty of Corona. We have seen several instances where the owners are being forced to reduce the rents or postpone the rental payments, and the demand for commercial real estate would be weak for several quarters to come. Obviously, telecom is one sector that benefited because of the increased usage of data as people start working from home. But even here, it might negatively affect the B2B services, and payment delay can also be expected for this sector. Um, Travel and logistics, I think, closure of national borders and flights definitely means that, it's zero revenues for these sectors. And healthcare is a very mixed scenario for healthcare. Regular treatments and surgeries would take a backseat, and they do give good source of revenues for the healthcare sector. And hospitals would definitely postpone this type of care at the cost of their business. One key sector that will be very tremendously impacted would be the small and medium enterprises. They are very small, as the name implies. They have very limited cash reserves, so their ability to sustain loss of revenues and negative demand shock is extremely limited. And they are the first contact point of a supply chain disruption, and therefore, they run the informal economy of Kuwait, and therefore supporting them at this point in stage is going to be very critical to bring back businesses to Kuwait. Let me take you through a detailed study of the banking sector, because it's the biggest sector in Kuwait and a very key sector to look at, because any type of support to the economy has to happen through the banking sector, and it is very important to know how this sector is going to be impacted. From a size perspective, it's a 70 billion asset industry, and with 13 companies listed with a market cap of about 16.5. Post-COVID, but it used to be about 30 pre-COVID, so it's literally a 50% fall. So from a total income perspective, we expect a significant fall, and though at an operating income level it can sustain, but at a net income level, we feel that the banking sector is going to experience pain because of increase in NPAs, non-performing assets, and a decrease in net interest margins. So banking sector will have to undertake repayment, loan repayment and interest payment postponement, or what they call as moratorium on loan payments. This definitely would impact their profitability. The central bank has reduced the capital adequacy ratio by 250 basis points from 13 to 10.5. This will enable Kuwait banks were well placed in terms of capital adequacy ratio even before Corona. So the recapitalization to boost banks' ability to absorb losses is a critical outcome, and banks will definitely, by postponing the NPAs beyond 3 months, it will get some breather. But the classification of classifying a loan as an NPL can be extended from 3 months to 6 months to make this operate better. And banks, as I said, will be a very important a touch point for the government to push through the reforms and stimulus package that they are planning to introduce. On the real estate side, of course, government is considering reducing rents of investment property owned by 25%. Rents can be deferred for 3 months, and the financing for residential real estate development has been increased. They have provided higher loan to value limits, and there are some measures that have been taken, but we need to address the financial stress by providing more stimulus to this sector, which is the next biggest sector after banking. And even banks' exposure to real estate is significant, and therefore, if this sector is not rescued on time, then that might impact the banking sector as well. And as I said, SMEs, they have given some reliefs in the form of waivers, but that may not be enough. The CBK has lowered the credit risk from 75% to 25% for the purpose of calculating the capital adequacy ratio, but definitely the SME specific stimulus package can be increased with keeping reality in mind. Otherwise, if this pandemic persists, then this will be the first sector to fall off the road. So we have several sectors like education and retail, and we have come up with detailed studies on each of these sectors that we will be covering in subsequent webinars. We now jump to the last part of the presentation, which is to visualize the recovery. The corona started in Q1, but the Q1 impact has been rather negligible because it really did a spread, or a community spread, or a global spread happened only towards the beginning of March. So pretty much Q1 was off the radar for the recovery scenario. So we're talking about Q2, Q3, and Q4. Now we have three scenarios. Scenario one is the mild scenario where we expect the impact to last for another 4 to 6 months, which essentially means up to Q2, and then you see a recovery in Q3 and a very strong recovery in Q4. Second scenario is a 6 to 12 month impact, where it will be a moderate to severe recession, and we will have even a very bad Q2, Q3, and Q4, and then we will have a recovery. And also there is a third scenario, which is, it will take about a year from now for the corona effect to go away, which means it will be a global recession in 2020 as well as in 2021. So if that is the scenario, then we are talking about sectors like travel, hospitality, auto, and energy will be badly hit relative to what we have seen so far. Now, what is the probability of these scenarios? There are many calls in terms of the recovery pattern. Initially, a lot of people aimed for a V-shaped recovery, which is the best thing to happen. And then as it started spreading like wildfire, the V became a U. And then people even said that the U is not possible, but we have to be prepared for a W. And the worst call has been so far an L-shaped recovery, which is the third scenario that I explained. So I don't think recoveries will be as elegant as a V or a U or W or an L. I think it will be an ugly combination of either V or U or W or L. And I believe that it's going to be not a very neat type of a recovery where you have Q1 and Q2 as bad quarters, and then you have Q3 and Q4 where everything is back to normal. So it is definitely contingent on many things, but most importantly, the recovery is highly conditional on the stimulus package unleashed by the governments. Now, in case of Kuwait, we can understand the government response to COVID in a three-year format framework. The first tool has been the fiscal tool. The second tool is the monetary tool, and the third tool would be the legislative measures. Now, these are the three options that are available technically to any government. And the idea is basically the first reaction is to prevent failures, which is emergency. And once you are past this, then you talk about or you start thinking about recovery, and then you aim for a sustainable growth so that in the next crisis we are much better prepared. So globally, you can see that governments have taken a combination of fiscal and monetary measures to tackle the problem of corona. We have summarized here what most of the governments in the world have done in terms of liquidity measures, solvency measures, and legislative measures. These measures are either aimed at, say, for example, households or organizations or financial sector or real estate or the labor market. So there are several action points that we have observed taken by several countries. We have tabulated here, and the one that you see in the red are the ones that Kuwait is yet to embrace as a policy option. So we haven't explored much in terms of solutions so far. And the good news is we have a lot of ideas on the table. And Kuwait is also better positioned to experiment with many of these ideas. And hopefully we must see some of these reds turning to black in the subsequent quarters and months. Just to put some numbers in the context, as I said, the government response has been primarily in the form of fiscal stimulus as well as monetary stimulus. An example of a monetary stimulus would be the reduction in interest rates or government guarantee on loans, for example. An example of fiscal stimulus would be the direct cash transfers to businesses and individuals. Fiscal transfer stimulus program involves increase in government expenditure, which means it will increase the fiscal deficit, whereas the monetary support would be can be construed mostly as an indirect support, whereas fiscal can be construed as a direct support. Just to give you some numbers, US has been the most aggressive in terms of stimulus package response. Its total response, stands at about 45%, with 15% fiscal stimulus and 29% monetary. Japan has also been very aggressive. The Eurozone in particular has been very aggressive. Germany, for example, has been putting its weight behind the stimulus package quite extensively. However, you can see that in the context of a GCC, most of the support so far has come through the monetary stimulus rather than the fiscal stimulus. For example, Kuwait, the total stimulus is about 13%. Out of which the fiscal stands only at about 1.2% so far. So for a credible and quick solution to emerge as a consequence of corona, I think the lever must shift from monetary to fiscal, and it should involve substantial support to not only small and medium enterprises, but also large corporations that provide significant employment to people or that have the ability to create the employment. I think that will be very important. So to conclude, I must I can say that it has been a very tough healthcare pandemic for every country in the world, and Kuwait is no exception. and it has taken some bold and quick initiatives. And but however, that may not be enough to rescue businesses. There are several big sectors that will be impacted quite deeply because of corona, like healthcare or education or retail, real estate, banking. So it is very important that we structure the stimulus program or response to COVID in a more holistic manner, so that our recovery is not only quick, but it is credible and enduring for the businesses to come back and start creating jobs. Corona is also a great, as one can say that every threat is an opportunity. This is a great time where Kuwait can explore the possibility of reducing its state footprint and allow private sector a major role in terms of disaster recovery process as well as job creation. Uh, I think this is a fantastic opportunity for all the GCC countries, including Kuwait, to uh, work more towards a sustainable recovery, so that the lessons that we draw from Corona can really be used to really shift the gears of the economy in terms of creating more balanced economic structure for Kuwait. So I will stop here, and I will, time permitting, take some questions and try to be brief in terms of my responses. Let me check the questions. Which component within fiscal policy should be relied on more to stimulate recovery? How much money should be put in this component? I think, in terms of support to businesses, large businesses and small businesses, the main impact would be on the OPEX or the operating expenses, because companies are literally having zero revenues as we speak. But if they have to continue to pay salaries and rents and other things, there is no way the financial model of any sector can be sustainable. So the best fiscal response would be direct cash support to businesses, and the best fiscal support for initiating demand in the economy would be cash support to citizens, which is also an idea that has been debated for a very long time. So this is what we are seeing in other markets. And I mean, in the past, whenever we had crisis, the response has always been monetary. You will see Fed slashing interest rates and then GCC following the Fed. But this time around, the ability of monetary policy is extremely limited, because even before we went into this crisis, the interest rates have been absolutely low. So from that point, there is only zero that you can go to as interest rates. Probably we have seen negative interest rates in the context of Europe, but I don't think it is a sustainable idea for US and other markets. So I believe countries must shift the gear from monetary to fiscal, and that is when you will see the best results. Obviously, there is no free lunch in this world. The fiscal response would mean a higher government spending, which would mean higher fiscal deficit. And you need to plug the deficit either by dipping into your reserves or by borrowing. Borrowing is the best thing to do because you have a zero interest rate environment today. But if for some legal reason, if borrowing is not possible, then one should be prepared to be counter-cyclical in terms of dipping into the reserves, actually. The recovery scenarios, are they based on COVID vaccines? They are based on estimates of a likely vaccine to come. But again, there is no visibility on vaccines. uh, one research agency said that normally it takes about 5 years to develop a vaccine. So I think vaccine is out of question in terms of scenarios. What will happen is that most of the population will develop a herd immunity to this virus, and then you will probably see that as a credible response to this healthcare threat more than discovering a vaccine. And there is a question about digitization. Can it help make a business more resilient? Absolutely. Yeah, digitization should be the first and the best response to managing the COVID threat. But as I said, it's not all sectors that lend itself very nicely to work from home concept or digitization. Take for example hospitality. The hotels have to run from where they are, so there is no way you can shift that process to home, for example. So, but sectors like financial services, banking, can embrace the digitization. Banking, in fact, has been aggressive on digitization for many years now, and they can be a very good template for other sectors to follow. But definitely, COVID has pushed forward the digitization process at least by 5 years for many sectors in the world and in Kuwait, actually. Are you concerned with the growing global debt? Absolutely. Debt is not a free lunch. Someone has to repay it at some point in time. Uh, the question is, how do you do that? But the borrowing when interest rates are so low also makes sense. But we need to keep a tab on the debt to GDP ratio. Fortunately, for most of the GCC countries, we are still at acceptable or very low levels of debt to GDP ratio. So our headroom, especially in Kuwait, is so high from a debt point of view that we don't have to worry about the growing debt. But globally, especially from a US point of view, I believe that the debt is going to be a major concern, and even for emerging markets. So this is one thing that can probably be seeding the next crisis as we speak. Uh, Assuming that interest rates drop below zero, what potential impact would it have on Kuwait economy? Like, the cost of funding will definitely will throw the project finance equation to the wind. And the when you look at risk-free rate and other interest rate based calculations, a negative rate doesn't lend itself to pricing products much better. So obviously the net interest margin for banks will come down, and people will not be able to make money on deposits, and therefore that will push them more into risky assets. So there are many flip side to negative rates of interest. And therefore, I don't believe that will be the case for Kuwait, because Kuwait will follow generally the US interest rate pattern, and US still has some way to go before they touch the 0 point or the negative point, but you never know. Uh, is it a good time to invest in food tech and be partly self-sufficient? Um, Not only, food security is a big concern. We have seen that happen, and investing in food tech can certainly be a very good idea. What might be the reason why Kuwait haven't pushed more towards fiscal economic stimulus? Probably they are weighing the pros and cons. They want to make sure that people don't take unnecessary advantage out of this largesse. So they might be, a bit more cautious in terms of how to structure one. But as we have discovered, the speed is the essential ingredient to face COVID, and any delay in decision making might definitely have long-term consequences that can be more costly than what we are seeing now, actually. Do you think using UK household spending pattern for Kuwait is realistic. It's not realistic, definitely, because in the context of Kuwait, we need to make our own deep research to find how the household spending is changing, but it gives a good benchmark because household, if you see the balance sheet of a household, normally they are very similar across countries, and therefore it can be an intelligent guesstimate to see and assess the immediate impact. But if you ask me, is it realistic? Definitely it is not realistic. We need to do something very quite specific to get there, but eventually we will be doing it. What if the oil price still low for more than years? Will it affect jobs in Kuwait? It will affect jobs big time in Kuwait because everything is based on oil. Our income is based on oil, and therefore, if oil prices remain very low for a long time, then the balance sheet will definitely, be significantly impacted. Uh, do we need to worry about a second wave? Yes, I mean, most of the countries are preparing for a second wave because there is no vaccine yet. And as lockdowns are rolled back, the community spread will increase and that will unleash a second wave. And we have to be very conscious about that. Uh, uh, I will definitely have to stop here. I have to be conscious about time. And thank you very much for being with me here. And we definitely will make this presentation available to all of you. And we are planning to come up with more specific business deep dives. And we will be informing ahead of time. And I look forward to sharing my thoughts and other executives for Markaz. And, we'll be in touch. Till then, please stay safe and stay healthy. Thank you very much.